Imagine a buffet where the trays are overflowing but nobody is eating. That's the Auckland housing market right now. Tons of listings, record high stock, interest rates are finally chilling out, and yet prices refuse to budge. The popular David Whitburn returns to break it all down. We are joined again by real estate expert and best-selling author David Whitburn. Dave was president of the Auckland Property Investor Association and continues expanding his 20 million property portfolio. He started by putting a minor dwelling on the back of his section, and his latest development is 74 properties in West Auckland. Dave, in December, almost no one was selling. Now, in January, the highest number of listings since 2015. What's going on?
It's pretty interesting, isn't it? It looks like, wow, lots of listings coming on board. That's fantastic. However, are they selling? That's the question, because the selling rates are not matching the rates of the listing there. So something sold and there's a buyer there, as opposed to just signing up a listing authority or being a private buyer and putting it on TradeBee. Concern is that the inventory levels are quite high, so it's great to have the listings rise if you're a real estate agent, but it doesn't mean anything unless they're sold. So there's some mixed messages going on there. We've got a bit of work to do in this market, and there's some mixed messages being sent out.
Yeah, 100%, because it really depends from the point of view that you're looking at. If you're a buyer, if you're a seller, are people buying those properties? I'm just looking at the data, and stock levels have jumped 18.9% compared to last year. So what does this mean for buyers and for sellers?
So the stock levels, or the inventory, that's the amount of properties that are available on the market to purchase right now. So these are at pretty high levels. That means that we still haven't got through into the boom phase of the property cycle. We still have as a buyer's market, because there are more listings available. What that means is that in terms of the economic laws of supply and demand, that there's an imbalance. There's not enough demand, so there's higher supply than demand, which doesn't give upward price pressure, not terribly much. So these prices are more or less linked in with inflation, so they're pretty much treading water. Not too many people actually think about that, the difference between real and nominal prices, but the increase that's been published in like 2.9%, that's broadly in line with what the consumer price index inflation's been for the same period.
Yeah, well, if we narrow it down to Auckland, which is a very attractive area for many investors,
and people to live in, of course. It's
to
our
live
country's
in.
economic hub. We've got over 1.7 million Aucklanders there, so pretty much a third of the country.
Yeah, yes, and usually when I talk to investors, they always want to start thinking about, oh, let's go Auckland first. But when I look here at the numbers again, most properties for sale in 13 years. Does this give up, what's happening here? Is Auckland becoming unattractive? Are people going to the regions? What's your point of view on that?
Some savvy investors are going to the regions to get increased cash flow from them, and that's really important as interest rates lower, and to build a portfolio there for some meaningful cash flow in the quest for financial freedom that we should all strive for. Sometimes that's really good there, but otherwise there are some also savvy investors like you and me that are able to invest in Auckland and get some positive cash out there. You just have to employ some advanced investment strategies like the ones that you teach.
Well, you were just mentioning about the dynamic of supply and demand and making sure you understand the data. Now, even though we have all those new listings on the market, prices haven't dropped much. They're pretty steady compared to last month and the last few months. So how can you make sense of all this?
Yeah, there are still plenty of buyers out there. For the majority of the market buying it lately has actually been homeowners. So homeowners don't really care. First timers don't really care so much about the prices and whether it's gone up or gone down there. They just want to get a home. Sometimes they're in overcrowded circumstances. Sometimes they just don't want to pay rent anymore and be able to put their own mark on a property. So they just want to buy a house. So they've actually been a big force in the market, the first homeowners. However, there are investors that are starting to come back in, and that's particularly, like you said in the intro, that the interest rates are low and heading lower. Recently, I've had Westpac do their 4.99% for 3 years, which has been a popular promotion. And some Westpac staffers have been telling me, hey, there's been getting some really, really significant inquiries. So, hey, it's working. That's what happens when you have a really strong price-led campaign, and I suspect they'll do well, and I think some banks will cotton on to that and start moving business towards their banks too.
Yeah, 100%. I was just looking at the whole picture. It's a very interesting time of the market because you have lots of listings, lots of properties on offer. Interest rates are coming down. So you would think that more people would be wanting to buy properties right now. So what's the catch up that we need to play here? What's missing for, the supply and demand dynamic to start kicking in?
Danny, I have to take some advice from a friend who's almost Yoda-like in it. His name's Craig Stanaway, and he thinks about the shark versus the sheep.
Are you a shark or just a sheep? Sharks hunt. They move fast, spot opportunities and never stop. That's how real wealth is built in New Zealand. Sheep, they wait. Follow the crowd and miss out on the best deals. If you want financial freedom, think like a shark. Be bold, act fast, and take control before the market shifts. Ready to be a shark? Like this video, comment if you're investing in New Zealand, and share with someone who needs to stop thinking like a sheep.
The sharks are the ones going around hunting for good deals, but there aren't that many of them out there. There are a lot of sheep that are just following things and just buying the odd average deal there, and just homeowners there that are busy working in their jobs as most people do, and only doing a bit of finding if they're lucky enough in their lunch break or in the weekends. So they're getting some particularly average deals without too much thought in it. And what's happening is there's a lot of change. There are people that are moving between regions, people that always want to do the normal stuff, upgrade a house, and there's still the odd person that, of course, wants to just buy a new build, others that want to buy something that's going to give them a bit more cash flow as well, the property too. So all these forces are at play because the property market has both homeowners in and also investors in. Housing is a basic need, so that's where it has some advantages. Everybody must have a roof over their heads. Not everybody has sufficient credit to be able to qualify for an investment property. Some people don't know their tenure, the time that they want to stay, so they would naturally not want to buy a property. So there are all sorts of reasons why you have to have investment properties. The government can't provide them all. It would cost too many hundreds of billions of dollars to do it. We've already got nearly 70,000 houses at Kaingo, right? So the challenge is that property investment is relevant and is a necessary good, but the settings haven't been there. The confidence isn't there in the market. So the sheep are basically not floating around, whereas there are some amazing deals there where you can be the shark, the apex predator, and cherry pick off there by actually taking some action, not being worried and not buying into the fear that the market might go down a little bit, that the unemployment rate may rise. So I'd encourage as many people to be sharks as possible so they can actually go out and get some fantastic deals that will really help their path towards financial freedom.
I love what you said there, and there's so much to unpack because when we talk about property, we think, numbers, which should be a very clear and straightforward answer. However, you see that all the time people are going, but I don't know, is this a good deal? Is this not a good deal?
Yeah.
And with so many offers out there, if you are the shark, you'll be able to nail it down and just make a decision based on the numbers.
Absolutely. Sometimes you've got to take action quickly. Sharks sometimes don't faff around and plan and try to get things under contract for 20 working days, due diligence to go and analyse everything. Sometimes they make the decision and just going for the kill. Yes, occasionally there might be the odd accident, but it's extremely rare. There, obviously, condolences to anybody that's been impacted by a shark event, but I've had over 20,000 swims in the ocean, seen sharks there. No, in the ocean, no sharks in my pool, only pool sharks there and toys there. But I make sure that that I don't worry too much about it. Everyone thinks I did commerce with my law degree. I actually did a BSc, and including in marine biology, and we've got so many millions of sharks in our territorial waters, and yet far fewer than one person a year gets killed by a shark in New Zealand, despite the billions of swim events that people have. So it's something there that plays a lot in the psyche, but it's not a big deal. Sharks want to eat fish there. So, but in a property investment sense, the shark is the one there that's out there that can swim extremely fast. They're agile and they're powerful and strong, and that's what I would encourage people to be, having some of those qualities on them. Not the shark-like behaviour. No. We're not talking about that. That's unethical behaviour. We're talking about the characteristics of the shark to go out, appraise deals quickly, take decisive action, and bang, it suits my criteria. Let's do it now, rather than having lots of time on it and convincing yourself to say no, and it's not moving yourself forward.
Yeah. And I think a lot goes back to the analysis paralysis. It's just
Yes.
everyone is wanting the unicorn deal, and then they want, all the criteria to be met. But I guess the shark will just go find the deal, put it on the DD, do your, get all the information you need, but take action, do that 1%. And it's interesting because if you have all those listings out there, it's not a lack of deal. You need to maybe start asking questions. What else do I have to do if you really want to invest in property to get started?
Sometimes you don't have to look for the unicorns. One of the skills that others have told me have done quite well is by finding sort of ponies, even donkeys, but actually turning them around and rehabbing the deal to make it a unicorn. You can transform it there. Sometimes it can be as simple as just a basic renovation, the street appeal, the kitchen, the bathroom. Sometimes you have to do a bit more than that. Sometimes you need to relocate a home, build a new home, build 2 extra homes to get 3 on the same title. Sometimes you've got to create the deal. And that's where some of the very best investments returns that I've had are from taking deals that others haven't seen the opportunities in.
Yes. And I see that over and over again, even like with the community, when we have someone new joining, they, again, trying to look for the unicorn, but then we realize what's the opportunity that you're not seeing here. Because when you look at a listing on TradeMe, you think, oh, it's just a 3-bedroom, 1 bath, nothing to it. But what else can you do to their property to turn it into a deal?
Absolutely. We've seen so many examples there. Sometimes people who have been able to do up and unders and do fire rate and structural engineering to get a 3-bedroom downstairs from the 3-bedroom when lifting it there. Obviously not for the faint-hearted. They've got to take professional advice. Others have had heights with big land they've been able to get extra income streams from. That's also then given them a capitalisation rate value to give them huge equity increases. Others have moved that house off the site, sold it, and then built 6 in it there. So there's so many opportunities that you can do. Sometimes there's a property that has an oversized laundry. I've seen 9 square metre laundries. Could that possibly be moved into the kitchen that becomes a bedroom? Maybe. So it's things like that you can play around with.
Exactly. Yeah. So now we understand where we are in the market.
Yes.
We have lots of listings out there. Buyers are not yet, going to the market, but you need to understand the opportunity.
Yep.
So from your point of view, is this a buyer's market? Because that's the question I'm getting every day.
It's a buyer's market, Janie. This is a great time to buy property. We haven't fully exited the downturn phase of the property cycle yet. We're getting close to it and hitting the recovery phase really close. It's just that we need to get a few more things right. And when the listings, the inventories stacking up like it is, this is not in the Queenstown Lakes region, Queenstown, Wanaka, those areas are actually going really, really well. That's certainly in a recovery phase, but other regions of New Zealand aren't going quite so well. So those ones, we've still got problems because the inventory is still too high. That's what makes it a buyer's market, because the supply, the listings, exceeds the demand. The buyers that are pre-approved that are able to purchase it. So tell people that it's a buyer's market, apart from Queenstown Lakes District, and that it's a pretty good time to buy because the market will turn, interest rates will get lower, and that'll only enhance your returns to do it.
100%, David. And thank you for sharing, because I think, again, it's a mix of emotion and the data and running your own numbers. But we know the listings are out there, and if you're able to spot the opportunity that no one else is seeing, you can find the deal that you're looking for and get started. Don't wait for the unicorn. Don't be the sheep. And I guess just to finalize, if we know that's a buyer's market, I still hear people waiting for the price to drop. Is this something wise? Is there a way for you to time the market? Is it going to get any better than the way it is?
Because it can be on an individual basis. Sometimes agents have fought with the vendor and they bought the listing, because to get that listing they've had to tell the buyer what they want to hear. The buyer's made it quite clear they want to have a high price. They've been conditioned to what the prices were in 2021 and 2022. They're hoping that it's worth $750,000. I mean, realistically it's worth $650,000. So sometimes the price will drop there because they might list the price for a while, or otherwise if the price is not listed, that's their expectation on it. Sometimes it gets flushed out by auctions. They tend to work best for the agent and not necessarily the best for the vendor or purchaser. On occasion, it can stress vendors out sufficiently, particularly with a bit of pressure that agents and some of their leadership can give to the vendor by saying, hey, this is the marketing campaign. This is what we need to do. The market's talking. You just need to move to meet the market. You can tell that we've done the best, communicated with you along the way. Look at these thousands of hits that we've got on trademedia.co.nz and our own website. And that can be a good way to do it. In a buyer's market like this, sometimes you're the only bidder and you can have a bit of fun at auction. Sure, sometimes you'll get lots of auction people there, and the winner will be the person that pays $1,000 more than the second highest bidder. Great. But in general, going to auctions can give an opportunity for the purchaser, and because it's got the vendor in a heightened emotional state, which can give them advantages. There's something that's in this market obviously represents a bit of risk for the vendor, but you can take advantage of it and be that shark to pick up properties in auctions.
Thanks, Dave, for sharing your perspective with everyone today. And yeah, it sounds like it is a buyer's market. The listings that are out there, make sure you do your DD, ask the questions, but also take action. It's never going to be the perfect market. So if you know anyone that's looking to buy a property or start investing, send this podcast to them. It's good to learn what's going on with the market, so then you can make the right decisions. Make sure you give it a like, comment below, and we'll see you next time.
Financial freedom. Hello there.